President Trump will often use the stock market as evidence that the economy is great. And it's true. It's been a good market throughout his presidency. The S&P 500 reached a high in February. Once the pandemic hit, it plummeted. Since then, it's recovered and even surpassed previous highs. But it's important to note that even this solid stock run has not been record-breaking, as Trump often claims. Returns through this point in his presidency have been better than recent presidents Reagan, Carter, and George W. Bush, but not as good as Clinton and Obama. So what do other indicators say? If we look at the change in GDP year over year, we can get a sense of economic growth. During Trump's first 3 years in office, the economy grew an average of 2.5% each year. That is a slight improvement over Obama's second term at 2.3% a year. But the Federal Reserve still estimates the economy will shrink 3.5% this year. Another indicator is how many jobs were added to the economy. Through the first 3 years of Trump's presidency, jobs were being added at a pretty consistent and strong pace of 182,000 jobs a month, a similar rate to the recovery from the Great Recession. Of course, the pandemic has been devastating, and while jobs are being added back at a historically strong clip, total employment is not yet back to the levels we saw when Trump took office. It doesn't take an economist to realize that things are not in a particularly good place right now, but Trump continues to poll well on the economy despite the numbers. When Obama asked the public to re-elect him in 2012, the unemployment rate stood at 7.8%. The question is, are we rebounding at a rate that makes people feel confident as they head to the polls? We'll see in November.
Hey, NBC News viewers, thanks for checking out our YouTube channel. Subscribe by clicking on that button down here and click on any of the videos over here to watch the latest interviews, show highlights, and digital exclusives. Thanks for watching.